Every single day, you hand your money to a bank, trusting them to keep it safe. But what if the very institution you trust is quietly profiting off your ignorance? The banking industry generates hundreds of billions of dollars a year, and a shocking amount of that comes from fees, tricks, and fine print that most people never question. Today, we're pulling back the curtain on the 10 dirtiest secrets banks don't want you to know. And by the end of this video, you'll never look at your bank account the same way again. Secret number 1. Your savings account is losing you money. Banks love to advertise their savings accounts as a safe place to grow your wealth, but here's the truth most people miss. The average savings account in America pays around 0.4% interest. Meanwhile, inflation runs at roughly 3 to 4% per year. That means every single year, the money sitting in your savings account is quietly losing purchasing power. $1,000 today will buy you roughly $960 worth of goods next year. Banks know this. They're counting on you not doing the math. While you earn pennies, they take your deposits, lend them out at 7, 10, even 25% interest, and pocket the difference. Your savings account isn't growing your wealth. It's a slow, invisible leak.
Secret number 2. Overdraft protection is designed to drain you. Banks market overdraft protection as a safety net. They say it's there to save you from the embarrassment of a declined transaction. But overdraft protection is one of the most profitable products in banking history. American banks collected over $6 billion in overdraft fees in a single year. Here's how it works. You spend $2 more than you have, and the bank covers it. Sounds helpful, right? Except they charge you $35 for that $2 transaction. And if you make 3 more purchases that day before you notice, that's $140 in fees, on maybe $15 of spending. Some banks even reorder your transactions, processing the largest purchases first to maximize the number of times your account goes negative. It's not protection, it's a trap. Secret number 3. Your credit score is a game, and the banks wrote the rules. You've been told your whole life to build a good credit score. But have you ever stopped to ask who benefits most from this system? The credit scoring model was designed by and for lenders. It doesn't measure how financially healthy you are. It measures how profitable you are to banks. Someone who pays off their credit card in full every month is less profitable than someone who carries a balance and pays interest. That's why responsible behavior, like closing an old account or paying off a loan, can actually lower your score. The system rewards debt, not discipline. And banks use this score to decide the interest rates on your mortgage, your car loan, even your insurance premiums. They've built an entire economy around a number that serves their interests, not yours.
Secret number 4. Banks create money out of thin air. This one sounds like a conspiracy theory, but it's actually how the modern banking system works. It's called fractional reserve banking. When you deposit $1,000, the bank doesn't lock it in a vault. They keep a fraction, sometimes as little as 0% after recent policy changes, and lend out the rest. That loan then gets deposited at another bank, which lends out most of that, and the cycle repeats. Through this process, your original $1,000 can become $10,000 circulating in the economy. Banks are literally creating money through lending. They earn interest on money that didn't exist until they typed it into a computer. Meanwhile, you're told to work hard and save. The game is rigged at a fundamental level. Secret number 5. Minimum payments on credit cards are a wealth extraction machine. When your credit card bill arrives, the bank highlights a small friendly number, the minimum payment, usually around 2% of your balance. It feels manageable. That's the point. If you owe $5,000 on a credit card with 20% interest and only make minimum payments, it will take you over 20 years to pay it off, and you'll pay more than $8,000 in interest alone, turning that $5,000 balance into over $13,000 total. Banks design minimum payments to keep you in debt for as long as mathematically possible. Every month you carry a balance, they earn. The minimum payment isn't there to help you. It's there to maximize their profits.
Secret number 6. Banks profit massively from your data.
Every purchase you make with a debit or credit card creates a data point. Where you shop, what you buy, how often, how much you spend. Banks collect all of this, and while they have privacy policies, they also have partnerships. Your spending data is aggregated and sold to marketers, hedge funds, and retailers. Some banks have entire divisions dedicated to monetizing customer data. They know you're about to have a baby before you've told your family based on your purchasing patterns. They know when you're stressed, when you're splurging, and when you're vulnerable. And they use that information to target you with precisely timed product offers. You're not just a customer, you're the product. Secret number 7. The mortgage industry is built on hidden costs. Buying a home is supposed to be the American dream. Banks are happy to help you get there. For a price. A big one. Beyond the sticker price of your home and the interest rate you negotiated, there are origination fees, appraisal fees, title insurance, private mortgage insurance, application fees, underwriting fees, and closing costs that can add up to 3 to 6% of your home's value. On a $400,000 home, that's $12,000 to $24,000 in fees, most of which go directly to the bank. And then there's the interest itself. On a 30-year mortgage at 7%, you'll pay over $550,000 in interest on a $400,000 loan. You end up paying nearly $1 million for a home that costs $400,000. Banks have turned the dream of home ownership into one of the most profitable products ever created.
Secret number 8. Too big to fail means you pay for their mistakes. In 2008, the world's biggest banks made catastrophic bets on subprime mortgages and crashed the global economy. Millions of people lost their homes, their jobs, and their savings. And what happened to the banks? They got bailed out. The United States government injected over $700 billion of taxpayer money to save banks that had gambled recklessly with other people's money. Not a single major bank executive went to prison. Instead, many of them received bonuses that same year. The message was clear. When banks win, they keep the profits. When they lose, you pay the bill. And since then, the biggest banks have only gotten bigger. The top 4 banks in America now control nearly half of all deposits in the country. Secret number 9. Banks lobby to keep the rules in their favor. The banking industry spends more on lobbying than almost any other sector. In recent years, banks and financial institutions have spent over $2 billion lobbying Congress. They fight against consumer protection laws, push for deregulation, and work to weaken agencies like the Consumer Financial Protection Bureau. When regulations get rolled back, banks can charge higher fees, take bigger risks, and face fewer consequences. This isn't a conspiracy, it's public record. The banks have armies of lobbyists writing the rules that are supposed to regulate them. Every time you pay an unexpected fee or get trapped in a predatory lending product, there's a good chance a lobbyist helped make that possible.
Secret number 10. There are better alternatives, and banks are terrified of them. This is the secret banks really don't want you to know. You don't need them as much as they need you. High-yield savings accounts at online banks now offer 4 to 5% interest, 10 times what traditional banks pay. Credit unions, which are member-owned and nonprofit, consistently offer lower fees, better rates, and more transparent terms. Fintech apps have eliminated the need for many traditional banking services entirely. And the rise of decentralized finance is challenging the very foundation of what banks do. Banks have spent decades building a system where you feel like you have no choice but to use them. But the walls are cracking. Every year, more people are moving their money to institutions that actually work in their favor. So what should you do with all of this? First, stop being passive with your money. Check what interest rate your savings account actually pays. Audit every fee you've been charged in the last year. Opt out of overdraft protection. Pay more than the minimum on your credit cards, always. And most importantly, understand that banks are businesses. They are not your friends. They are not looking out for your best interests. They are looking out for their shareholders. The moment you understand that, you stop being a customer and start being a strategist. The banks have had the upper hand for centuries, but knowledge is the one currency they can't control. Now you have it. Use it wisely.
Secret number 11. Banks weaponize convenience against you.
Ever notice how easy it is to spend money with a card, but how painful it is to get a refund or close an account? That's by design. Banks invest billions in making spending frictionless. Tap to pay, one-click purchases, instant credit approvals. But try to dispute a charge, cancel a subscription, or transfer your money to a competitor, and suddenly there are forms to fill, holds to wait through, and representatives who put you on hold for 45 minutes. This asymmetry is intentional. Research shows that people spend up to 20% more when using cards versus cash because the pain of paying is removed. Banks and card companies engineer the entire experience to keep money flowing out of your pocket and into their ecosystem. The easier they make it to spend, the harder they make it to leave. Secret number 12. Your free checking account isn't free. Banks love to advertise free checking. No monthly fees, no minimums. Sounds great. But nothing in banking is truly free. They make money from your free account in at least 4 ways. First, they use your deposits to fund loans at much higher interest rates. Second, they charge you for extras like wire transfers, cashier's checks, and stop payments. Third, they earn interchange fees every time you swipe your debit card, usually around 1 to 2% of each transaction. And fourth, they sell your transaction data to third parties. A bank with 10 million free checking accounts is sitting on a gold mine of zero-interest capital and consumer data. You're not the customer getting a free product. You're the product generating free capital.
Secret number 13. Banks use fear to keep you loyal. Switching banks sounds simple, but banks have engineered a web of dependencies that make it feel impossible. Your direct deposits, automatic bill payments, linked accounts, credit cards, and mortgage are all tied to one institution. Moving everything feels like defusing a bomb. Banks know this. It's called switching costs, and they've maximized it on purpose. Studies show the average person stays with their bank for over 16 years, even when better options exist, simply because the process of leaving feels overwhelming. And banks reinforce this with subtle fear messaging. They'll warn about potential disruptions to your credit score, delays in direct deposits, or risks with new institutions. They're not protecting you. They're protecting their revenue. And here's a bonus that might be the most important of all. Banks profit from your financial illiteracy. This is the thread that ties every secret together. Banks spend almost nothing on educating their customers about how money actually works. There's no pamphlet explaining compound interest when you sign up for a credit card, no warning label on your mortgage showing the true total cost, no tutorial on how overdraft fees actually work. This isn't an oversight, it's a strategy. The less you understand about how banking works, the more money they make. Financial literacy is the single greatest threat to banking profits, which is exactly why they'll never teach it to you. But now you know, and that changes everything.